Let's talk about an AMC stock price target by the end of this week because hell, why not? We have earnings on Thursday. Adam Aron has pretty much hyped up this earnings report to be something that should help crush short sellers, to change the valuation of AMC, whether that is giving out a dividend that short sellers would have to pay us, the long holders of AMC, or adding new stakes in new companies. We're going to get a lot of new information, and from my perspective here, AMC is probably going to post pretty good earnings, and you might see a rally this week. But you gotta know the full picture here. AMC stock does tend to sell off the day after earnings, the couple days after earnings. It tends to happen a pretty large percentage of the time, but 83% of the time, actually over the last year and a half, the only time AMC stock has not seen a 20 to 50% rally 2 to 4 weeks after earnings was actually back here in November. Every other time you have seen a very substantial rally. For a quick reference, you went from about $9 back here, March of 2021, on the day of earnings. You sold off a couple days after earnings, but then you made your way up to $15 per share. That was a return of roughly 45%. Back here, you had 1,000% return when we had earnings May 6th, 2021, and obviously we all know what happened about a month out from there. And even in August of 2021, the stock went from $32 all the way up to $52. That was another gain of about 45%. November, you actually, seen that negative reaction after earnings. What happened just last March, in March of 2022? Well, the stock was trading at about $17 and then ran all the way up to $36. And you had plenty of time to get out in the mid 30s, right? So that was a gain of over 100%. What happened with just this last earnings? Well, you sold off after earnings hit a low of $9.70 per share and then ran all the way up to $18 per share a month or two after earnings, right? This was the longest stretch. Usually it's 2 to 4 weeks. Last earnings did take a little bit longer, and that was a return of over 100%. So there you guys have the data, and hopefully that was like a minute long. You guys just got a 10-minute long spiel of data in only a minute. The data supports buying AMC stock on earnings, no matter what happens with the earnings. To be honest with you guys, not all of these earnings were good, but AMC stock still rallied 83% of the time. The only time we have not is in the month of November. That would have been the one time where you would have actually lost money. Any other time, you would have made a substantial return on your investment. Now, considering AMC stock is back down to under $15 per share, it looks like a very attractive zone to start acquiring more shares of AMC. The valuation is certainly not as stretched as it once was. Even if AMC stock can get back to pre-COVID revenue numbers, well, it's not that overvalued. If you actually, like, fundamentally, right, let's not get confused. Fundamentally, the market cap sitting at $7.47 billion. Pre-COVID revenue was about $5.5 billion, but this time around, AMC is going to have more earnings because we have a lot less fat to the business. As you guys can see over here, there's no reason you should do $5.5 billion of revenue and still lose $150 million. Even during 2018, AMC only made $110 million profit. If we get $5.5 billion of revenue this year, AMC is going to post a much larger profit than $110 million because the profit margins are going to be a lot better. And analysts are expecting about a loss of 0.26 cents, a loss of 26 cents per share, which 3 out of the last 4 earnings that AMC has actually produced a beat to the EPS roughly of about 17% every single time. So when you put all that together and you take into context what Adam Aron has said about pouncing on the shorts, it's probably a good idea to buy AMC stock, or at least hold AMC stock past earnings. And don't be surprised if AMC sells off after earnings. That's almost expected, and that's almost what you want to see if you're somebody that is buying the dip, because then you can really make that large percentage return if you buy it on the lows before you start that signature 2 to 4 week rally after earnings. So that in a nutshell, kind of what I expect out of AMC earnings. I don't know what they're going to say. Adam Aron sounds pretty confident in what he's been saying, pouncing on shorts and all of that. We're not going to dive into that too much because that would be another 5-minute spiel, and we're not going to do that. Hopefully you guys have paid attention to the videos that have been coming out over the last couple of weeks. Now, as far as other things that are going to move the markets, seriously, I've said this a couple times, but don't be confused about this. The only thing the markets are reacting to right now, and the only reason you have really gotten this parabolic rally in the S&P, the NASDAQ, and even the Dow, the S&P up 14% from the low that we seen at 362.17 in only about a month, it is one reason. Investors expect inflation to come down, thus meaning the Fed will raise rates less aggressive. But Fed Powell did not confirm that. He said that they're going to do what the data says. So the markets are expecting inflation to come down. If it does not, well, that's where you have a big problem. And now all of that happened on Wednesday. You got the Thursday GDP report. That was negative. Yes, you are in a technical recession. Call it an inventory recession. Call it an earnings recession. Call it whatever you want. But you are in a technical recession. Now, on Friday, you got the PCE data that did come out, and PCE came in at 6.8%. This is the Fed's preferred measure of inflation because it doesn't have as high of a weighting of food and energy that tend to be very volatile, right? The price of oil, price of food directly tied to rainfalls and who produces what and what countries invade other countries, right? It's very volatile. But even the core PCE, or just straight up PCE, they all came in about 0.1% higher than what the markets were expecting. So not a big jump, but still a sizable jump for PCE, something that does not move up all too much. And you're up from 6.3% last month to 6.8% this month. So the markets didn't really care about it. The markets didn't react to it. Why? Because there's 2 CPI readings, 2 more PCE readings, there's 2 unemployment reports, there's 2, employment reports that come out from now until the next Fed meeting, which is September 21st. And this is something you guys should watch like a hawk. This is the federal funds market, basically what investors are predicting as far as the Fed raising rates at their next meeting. You can see 10% of market participants expect a 75 basis point rate hike. That would be the Fed giving us a smaller rate hike than what we got last time, which was 75 basis points. 90% of investors are expecting a 50 basis point rate hike. And now, depending how the data comes in, depending how inflation reports come in, and depending on what Fed speakers say, it will move the needle on the Fed futures, and you will see a direct correlation between the 75 basis point rate hike odds going up and the stock market going down. If this were to shoot, let's call it by the end of the week, this goes to 35-45% odds of a 75 basis point rate hike, well, the markets are probably going to see a pretty red week this week. I don't know if that's going to happen, but it looks like the markets are starting to get a little bit toppy. And this is important relative to AMC. If you're only in AMC, this is still important to know because it will affect AMC stock, whether positively or negatively. You also do have other earnings, which could affect AMC stock as well. You have Monday, after hours, Diamondback Energy, Activision, Blizzard. Tuesday, pre-market, Uber, Caterpillar, BP, JetBlue, Marathon, Marriott International, and even Ferrari. Tuesday, after hours, AMD, PayPal, Oxy, SoFi, Airbnb, and Starbucks. Wednesday, pre-market, Under Armour, Moderna, CVS Health, Yum Brands, and Regeneron. Wednesday after hours, Marathon Oil, Energy Transfer, Lucid, Robinhood, Booking Holdings, one of the top holdings of Michael Burry. So that one's going to be pretty important. At least I think it's kind of weird that he owns Booking Holdings. But anyways, you have that in Wednesday after hours. Thursday, that's where you start to get a lot more companies that I have large weightings in. So pre-market, you have Crocs, Kellogg's, Alibaba, Datadog, ConocoPhillips, Paramount, Eli Lilly, Penn National Gaming. Thursday and after hours, that's the one that I want to pay close attention to. I do have a lot of money in SoFi, a lot of money in PayPal, money in Airbnb, money in Starbucks. Used to have a lot more money in AMD, but I have since reduced that position quite a lot. So Tuesday, Thursday, those are going to be the big days. Thursday and after hours, AMC, beautiful little AMC symbol right there. You have Block, better known as Square, Warner Brothers Discovery, Fubo, Twilio, Carvana, and Cloudflare. Friday, you pretty much have DraftKings and Canopy Growth. Goodyear Tires as well. Might give us a glimpse into potentially what's going on with inflation and some weird items. Our tire prices still going up. And Cinmark as well, Friday pre-market. So you're going to have some earnings that could definitely move the markets, and something to be watchful of. Definitely Tuesday, heading into earnings on Thursday. But all in all, you got your Apples, you got your Amazons, you got the large trillion-dollar companies that have a large weighting of the markets. The biggest thing you're going to see out of earnings is potentially AMD moving stocks like Nvidia, moving stocks like Intel that have higher market weightings or higher weightings of the S&P 500. And, you know, same thing with Activision, same thing with Pinterest, with Uber, AMC, Square, DraftKings. They're going to move different industries, and that could give you a broad move down or a broad move up. Now, at the same time, you are seeing interest rates for mortgages that have started to come down. Now, why that is important, and mortgage rates went from about 5.5% last week down to about 5.22% in just one day. And that is because investors are still pricing in a recession. Investors still don't want to buy the 2-year bonds. That's why the bonds are going up as investors are selling those bonds. Bond yields are going up. 10-year bonds are going down. Investors are buying bonds for the 10-year yield, which is almost 3%. I think it's 2.67%, something like that. And the yield curve is still inverted, 23 basis points. You want to watch this as well because this is still not a good sign. It's still pricing in a recession. It's still pricing in a Fed policy error over the next 2 years and pricing in higher inflation. And the best way to really look at this is if you thought over the next 2 years inflation would come down under 3%, buying a 2-year bond that yields you 3%, not a terrible idea. At least you're preserving your wealth for another 2 years. You're not going to lose a lot of purchasing power in theory, right? If inflation's 3% and your bond yields you 3%. Well, if you expect inflation above 3% for the next 2 years, you're not going to buy the 2-year bonds. The bond yields are going to go up because investors are going to sell those bonds, right? But over the next 10 years, if you did expect inflation to go down to 2%, well, it might make more sense to buy a 10-year bond, if you thought inflation was going to go potentially negative or even into a recession over the next 10 years. You tend to get deflation, during times of a recession. So all in all, guys, that's, the bigger picture for this week. Let's talk about AMC and the actual Ortex data, and then we'll go ahead and wrap up this video. So over here on Friday, as far as the option activity, we had 2 orders totaling $40,000, 100% positive order value. We've talked about this a couple times. In October 21st, $18 call for $26,000. In August 5th, $17 call for about $14,000. Not a lot of dollar amount of options on Friday, but it was positive, and you have seen some very large orders over the last couple of days with AMC stock. So I think that might be some earnings trades happening there. Who knows? Maybe they're playing the IV. Can't forecast that for you guys, but bullish is bullish, and that's the way to look at it. The dollar amount of shares that are currently sold short of AMC stock sitting at 1.47 billion. Estimated short interest of free float 19.59%. Free float out on loan 28.02%. Shares out on loan 144.45 million. Days to cover 3.45. Cost to borrow of 9.71 and 100% share utilization. Cost to borrow minimum at 6.56%. Cost to borrow max at 10.1%. Cost to borrow average at 9.21%. So given these numbers, these cost to borrow rates, it's still very high, and it's still, higher than what a lot of stocks are at. And it's remained pretty high around that 10% level, which is a lot if you have a large short position. And definitely, I think heading into earnings, Tuesday, Wednesday, I think those are going to be the days where you could see a cost to borrow spike as AMC and earnings, tend to have pretty volatile reactions. Now, My personal opinion, by the end of this week, you're probably going to see a bullish reaction. I don't think there's very high expectations for AMC, and I think Adam Aaron wouldn't put his neck out on the line and talk about crushing shorts and when they're going to pounce on shorts if they didn't have something big to say for earnings. Now, do I think we're going to go past the levels that we were at just back here July 21st at $18.37 per share? Well, probably not. That's really what I would target, is around $18 per share, around this peak that we've seen on July 21st, July 20th, and July 19th, as high as $20 per share, but the overall history of AMC earnings does not support a rally for this earnings. So be mindful of that. If you have bad earnings, you're going down to $12.50 per share. There's no other way to put it. That's the two scenarios here. You're probably going to see a big move to 18 in between 20, or you see a big move down to about 12.50. So that's pretty much it for this video. RSI sitting at about 49.51, pretty much that neutral level, and the MACD is bearish. So like I said, not high expectations. I do have faith in AMC and Adam Aaron. I don't believe he'd stick his neck out on the line and say all these things, which he has never done before, about crushing shorts, if they didn't have something they really thought was going to crush shorts. So all in all, I'm bullish over the next 2 to 4 weeks, but this week after earnings might not be a big bullish event. You might see a sell-off. That's something you guys definitely need to keep in mind. So that is it for this video. Like the video, subscribe to the channel, do what you guys got to do in that regard. If you guys want to come trade with me live in real time, link down below in the description of this video. That's it. You guys enjoy the rest of your day, and I will see you in the next one.